Good day guys, Lodz here again. Just sharing again with you guys my strategy and my technique, how I approach the market. As I've explained, I look at extreme highs, extreme lows. How do I discern whether the price is extreme high or extreme low? I use previous major points of support or resistance, and I go as far back into the past as possible to see how far down this point is to a previous point. For example, let's say it's gone back as far as 6 months to 8 months, or I can just know this specific price pair is at the extreme high or the extreme low. So just looking at this pair, we are looking at the Australian JPY, and it is on a 4-hour time frame. So I like to look at the 4-hour time frame because it gives me a general overview over a longer time period. So looking at this, I always look for a setup, for a trend setup, just to see where the market is going, as opposed to which direction it's coming from. So there we have point 1, we've got point 2, and we have point 3. That's enough to tell you that we have a trend going down. In this particular case, if you were to look within the trend, you would have seen this nice head and shoulder set up, which happens to give us a right shoulder exactly on the confirmation point, or point 3 going down. So that would have been another excellent sell position, and you would have gained some huge pips going down from that point. And just to see price it just heavily dropped. Just looking at the size of the candlesticks, it dropped heavily. It dropped to such an extent that it broke this major support point, and it went even further. So at this point in my mind, I'm thinking of one thing. I'm thinking of a double bottom, or I'm thinking of a inverse head and shoulders. At one point, prices here were at the extreme low, reversed back up, testing the now resistant point, and drop even further to further break this previous low to give us a even further lower low. As soon as that happened, I have what I call a inverse head and shoulder setup, the first phase of it. So whenever the first phase of that inverse head and shoulder takes place, I'm thinking one thing. I'm thinking buy setups. I'm thinking of buy opportunities. That's where I drop down to my 15-minute market maker chart, just to pinpoint exactly where I would enter this specific chart. Just another example. Then we see we're picking up a buy divergence setup. How do we notice a buy divergence setup? We see that we have lower lows. Yet again, the RSI is telling us a different story, where it's pulling up with higher. As you can see, this point is a higher high. So that's another clue that the market is about to reverse. So just to go back to the 15-minute chart, this is the Australian JPY, this is Australian JPY, exactly the same thing, but this is on a 15-minute time frame. So I look at my checklist. I look at, there's the peak, it was at extreme low. This peak over here, this point over here is exactly the same as this point over here. You won't miss it, guys. So everything seems to be playing out accordingly. So I get my first checklist points, which is the 50 and the 200 EMA crossing. Checklist number 1. Checklist number 2, the Asian box or the Asian session is less than 50 pips, and it's between the 800 and 200 EMA. Checklist 2, and it is less than 50 pips. Checklist 3, and then prices do what? They bounce off the Mayo. One bounce, second bounce, I'm probably on a buy over here. But then again, prices didn't just immediately go up. They did what we call a stop hunt. There you go, guys. You can see the stop hunt just drop. There's no need to panic, because due to my risk management, obviously I know how to balance my account size with my lot size. Even if prices were to drop to come and test this pinpoint here, I wouldn't panic because obviously my risk management is there and the clues are there. So if prices decided to drop, as you can see, I've got this left shoulder, I've got this head. If it decided to drop, I know that it will test this point, giving us a right shoulder only for it to go up. So since this is a 15-minute chart and it's going down, I know that this, you see this blue line that I marked over here, this is where my this is the point where my left shoulder is at. So even if it goes down, I know deep down that it has to test this point, give me a right shoulder, then go back up again. So I'm not panicking there because it's slightly going against me, because as you can see, when you jump from your 15-minute chart to your 4-hour chart, you can see right there it comes back as a spike and then it opens and closes as a green. So you are in a buy, then immediately you are in pip profit, which is this point over here, this movement right over here. So that's another typical approach, guys, how I've managed to blend the two. Market maker template, this is what we call a safety trade setup. When all of the boxes link, I just check, and then I've got a high probability setup, and then I'm in the trade. As soon as prices spike this point over here, spike 1, there you go, spike 2, it's another clue to go in long over here, right at this point. As you can see, there's a W setup right there on our TDI. TDI, guy, is a mixture of, is an indicator that is a mixture of the other side, Bollinger Bands, and MACD measurements. So that's how I use the TDI. It helps a lot when it comes to pinpoint buy and sell diversions, and obviously support and resistance points on your indicator, which is the TDI. So yeah, guys, that's another example of how I look at it: price action and the market maker template. This is Lods. Thank you once again for your time.